Hey, what's good guys? Welcome back to the channel. Awesome to have you guys back, and today we're going to talk about the best indicator since 1965, currently here in 2021, and still to be the best indicator even in 3045. So we're gonna first start off guys by explaining what indicators are. So let's get straight into things guys. So indicators are basically tools that we add to the chart to make information more clear, because remember, our job is to turn this abstract information that we see on the charts into something that we can profit from. So what an indicator is just something that makes the information that we already get from the chart just a little bit more clear so that we're able to make that decision. Now, to get into things, there are two kinds of indicators guys. So there are, number one, lagging indicators. And what lagging indicators do is that they provide signals that confirm the behavior of our price action. So they are lagging. So what they do, for example, we can consider, for example, a moving average to be a lagging kind of an indicator that confirms to us a nice, beautiful, strong trend that is already evident in our price action. Now we're going to go on to the second kind of indicator, and that is a leading indicator. And what a leading indicator does is that it provides signals before the price action happens. So for us to have one ultimate indicator guys, we need to have an indicator that is both lagging, that confirms our behavior of price action, and as well leading, that provides signals to us before price action happens, so that us as traders are still able to capitalize on the price movement that precedes the actual indication of our price action. So let's go into our two types of indicators. So basically guys, in a nutshell, we have trending indicators, which are indicators that basically help us to identify when markets are in periods of nice momentum, so when we're trending nice and impulsively, and as well as oscillating indicators, which are indicators that help us trade and identify as well these sideways moving markets. So we can assume that maybe a nice trending indicator for us to use would be something along the lines of a nice simple moving average or an exponential moving average. Same purpose, they both literally serve the same purpose. Or we could say a nice example of an oscillating indicator or a ranging indicator could be something like our RSIs or our MACDs or our oscillators. So those types of indicators that give us those nice overbought, oversold conditions are beautiful oscillating indicators, or indicators that help us trade and identify ranging price action. Now that we've spoken about the two types of indicators that there are, those two types of indicators guys imply that there are two main market conditions that we are trying to trade. We are trying to trade trending market conditions, and at the same time we are trying to trade those oscillating or ranging market conditions. So we know that these two market conditions are basically in one market cycle. So if you guys have not watched the video on the only market cycle that you guys need to know, please go and check it out. It is on this YouTube channel. So definitely go and check that out so that you can get a little bit more information as to what this market cycle is. But to generally go over this market cycle, every market enters a period of an accumulation, which is a preparation for a nice move to the upside, which we then call a markup. Along the way in the markup, there are obviously continuation structures that do develop along the way, and then after we see this markup guys, we basically enter a period of distribution, which is where prices are preparing for the next piece of momentum, which we then call a markdown. And as well as in the markdown, there are still periods of redistribution, so these continuation structures that then complete our structures. So every market basically follows this cycle where we have periods of accumulation, reaccumulation, and a nice markup. We also have periods of distribution and as well as redistribution, like we spoke about in our markdown. So these two main market conditions that we spoke about, generally we can conclude that there are impulsive phases within our market. So those markups and markdowns are our impulsive phases, and as well as there are those corrective phases, which is basically our accumulation and distribution phases, as well as our reaccumulation and redistribution phases. So like I said, guys, if you guys want to go into this just into a little bit more detail, then definitely do go and check out that video so that we don't leave you halfway in the explanation as we move on. So otherwise, guys, next we are going to go into those corrective structures. So now we are finally revealing, guys, what is this ultimate indicator that we have, and that is our chart patterns. Our ultimate indicator on our chart is basically our chart patterns. Why are we highlighting corrective structures in this nature? The reason why we are highlighting corrective structures is because as a trader, we need to be identifying these periods of accumulation or, for example, reaccumulation. So we need to be identifying these corrective structures in order to catch the next momentum that leads outside of these corrective structures. So whether we find a nice accumulation corrective structure, we are looking at the structure and identifying the nature of the structure to be able to catch the mark up or that next impulsive move to the upside. When we identify this continuation structure over here, this next piece of corrective price action, we are looking for how can we get into the continuation of this mark up. When we identify this distribution, we are looking for how can we get involved in the markdown and as well as the redistribution. So that's why I'm placing a very, very big importance on these corrective structures. So now that we understand that our eyes are focused on looking at these corrective structures and identifying them, there are only two types of corrective structures for us to basically be looking at. There are only, guys, continuation structures and reversal structures. Now let's get into the meat of why we say that these structures are the ultimate indicators when it comes to trading our chart structures. So guys, looking at the continuation structure. So continuation structures are obviously continuations of momentum, and the types of continuation structures that I love to look at are either descending structures, which we can isolate nicely using our trend lines, or ascending structures, which we can also isolate nicely with our trend lines. So the reason why we are saying that these are beautiful indicators is because these ascending structures, so these ascending and descending structures are both obviously reversal and continuation structures depending on where the momentum was coming in. If obviously we see a descending structure with momentum coming in from the downside, then we understand that this descending structure is a continuation structure. But for example, if maybe we see an ascending structure and momentum is also coming in from the downside, what we can then conclude is that this is a reversal structure. So obviously the momentum in which direction the ascending structure or the descending structure is coming in from will determine to us whether this is a continuation or reversal structure. But nonetheless, these ascending structures normally break to the downside and these descending structures normally break to the upside. So these are both continuation and reversal structures. Nonetheless, they both fall under these corrective structures. So what information are these continuation or reversal structures giving us when we're talking about these ascending and descending structures? So these structures are showing us momentum divergence. Remember when we discussed what important things we want indicators to be able to do is provide signals that confirm the behavior of price action number one. So we have these structures functioning as lagging indicators. They tell us or give us insight into the nature of price action, that price is decelerating towards the downside or decelerating towards the upside. We then also agree that as an indicator, we want every indicator, or rather our ultimate indicator, to also be a leading indicator and provide signals before the price action has come. What do these continuation structures also give us? They also give us a point of interest, an area where we can be looking for entries for the next momentous move to the downside or to the upside. So these corrective structures are both lagging indicators, which confirm and give us insight into the behavior of our price action, and as well as leading indicators that give us an indication as to where can we enter before the next momentous move. As well as, guys, I'm going to be a little bit more specific as to the types of corrective structures that I trade, and the two main structures that I look for are these ascending structures and descending structures, and as well as to be specific with our reversal structures, guys. Those head and shoulders and inverse head and shoulders are amazing pieces of price action. Why? Because these structures are amazing momentum divergence indicators as well. So they show us the downtrend that had been moving to the downside, then obviously momentum and order flow changing to a bullish bias market structure. So what these head and shoulder structures do, and these inverse head and shoulder structures do, is they give us an indication as to what is happening with price action. They give us an indication as to what is the behavior of our price action. They show us prices decelerating and losing momentum, and obviously buyers then taking control, starting a new uptrend, because we know our uptrend is categorized by us seeing that swing high, that new higher swing low, and then obviously this new higher high, which is the beginning of our uptrend. And we know that for us to be able to capitalize on this inverse head and shoulders, we need to wait for this break and retest of our nice neckline, which is obviously a nice, beautiful up trend. So what this indicator is doing, or what this chart pattern is doing as an indicator, is giving us an indication as to what is the nature of and the behavior of our price action. We are also getting a leading indicator, because now we know that momentum has shifted. We also understand that we can be able to capitalize on a bullish move from this inverse head and shoulders. Why? Because we know the nature of how these structures complete. Guys, this is basically our run through of what the most ultimate indicator is, and I guess this video is both informative to someone that is also still learning, someone that is trying to put information together, and as well as someone that already understands these concepts and just wants to know the reasoning as to why we highlight and place an importance on our price action. Why do we fundamentally look at the actual nature of our price action and then make decisions off the price action, instead of slapping on extra things that give us confirmational biases and all of these other things, conflicting biases? Because I know, guys, and I've been there at the stage where we slap on a whole lot of things thinking that it's going to be the holy grail or give us the holy grail, but all those extra added indicators do is just confuse our process and make things just a little bit more difficult. What we are doing here is showing you that just by using price action alone, you can still be able to get the benefits of an indicator. Why? Because price action provides signals that confirm the behavior of the nature of price, and as well as provide signals of where you can be able to capitalize on the next piece of momentum. Guys, thanks so much for watching until the end of this video. If you have received the amazing information and obviously the value that was intended for you guys, definitely do drop this video a like. I definitely will appreciate it. Otherwise, if it's your first time on the channel, don't leave the video without subscribing, because you will miss the future pieces of information that we do drop, the gems that we're always dropping on this channel to make you a better trader bit by bit. Thanks so much, guys, for watching until the end of the video. This is T.Mayne, your FX Chasers mentor. I will see you guys in our future videos. Have a good week, guys. Cheers.